been so much is going on in the investment world. It's a really interesting time. You've been involved in a number of deals, both early stage. You were a founder at one point in life, but you've also been involved in a lot of late stage deals. How would you describe the current deal market generally?
Well, first of all, I appreciate getting right at it. There's no foreplay here, so that's good. Current deal environment, there is a lot going on, and I would say a few things that stand out. Number one, strategic M&A is back. You may have seen Kuehne + Nagel just bought IMC a couple days ago. What was interesting about that is Kuehne + Nagel, $20 billion plus global freight forwarder, buying a domestic intermodal marketing and logistics business. Kuehne + Nagel didn't have to buy anything, but number one, public companies are under pressure to buy more. So think about it. If you were a public logistics company and you were growing 10, 20% during COVID, more during COVID, and then during the freight recession of the last 2 years, your shareholders were expecting you to grow. You weren't performing, but it wasn't your fault. It was a freight recession. But now it's time to lean in. So I think you're going to see other companies like Kuehne + Nagel, public companies, lean in. And so Kuehne + Nagel IMC is one example. Secondly, I think you will see more private equity-backed logistics companies buy businesses. Now, I'm in this position because Cambridge Capital, of course, we're a private equity firm. We have 9 portfolio companies, and a couple of them are freight-related businesses. And the challenge with the private equity-backed logistics companies is they want to buy. However, if you've lived through the freight recession in the last 2 years and there's this great reset in terms of valuation, most private equity buyers today, in order to finance their acquisitions, will have to put more cash in. They don't like doing that. They'd rather use debt to pay for their acquisitions. But because if you bought during 2020, 21, or 22, your EBITDA is lower, your debt ratios are higher, and therefore you need fresh equity to put in. And so a lot of private equity-backed logistics firms want to buy businesses, but that's what's been holding them back. I think you're going to see people start to lean in. And then third and finally, I think you'll see more interesting deals where large corporates make decisions that something didn't fit anymore. UPS divesting Coyote to RXO is an example. So in short, a lot of activity.
A lot of deal activity. Deal activity, as you've mentioned, for the last couple of years has been a little bit suspect. We have seen, or certainly saw back in 2021, 22, the international ocean container companies that were once in a lifetime level profitability, and they've maintained a level of that profitability, not maybe at the peak, but certainly highly profitable compared to where they were before, have leaned into the domestic market. We talked about Kuehne + Nagel leaning into the domestic market. We're starting to see a lot of activity in the US market. Is that just a reflection of this sort of end-to-end logistics desire? Is it a reflection of the confidence in the US market and the US consumer and the US economy? What is really driving that change, do you think?
So it's both of those factors, and then there's also a third, and that is a lot of the big steamship companies recognize that live by the sword, die by the sword of the ocean cycle, not a great place to be. You'd rather have more predictability. And so Maersk, for example, Maersk's CEO, I think 3 years ago, said by the end of this decade, he would like the majority of his profit to come from non-steamship activities and services. So diversification's a big element, and I think that's why MSC, Maersk, and other big steamship companies are looking to continue to diversify, to buy, for all those reasons, to expand end-to-end, to deploy the excess cash from that spike, and of course to diversify.
We saw USA Truck, one of the few publicly traded truckload carriers, actually sell to someone in the international market. Is that a one-off deal, or do you think we'll see more of those types of deals? Does truckload become attractive, or was this just an exception to the rule?
So I think we will see more of those steamship acquisitions of domestic transportation. We haven't even gotten into politics yet, but yes, that's coming. And then secondly, look, I think the trucking acquisition was a bit of an anomaly. Mm-hmm. Do I think trucking is going to be strategically attractive to that many non-trucking companies? I don't. I think there is a case to be made that if you're trying to do end-to-end and control the supply chain, it belongs in the portfolio. But I think the more common combinations that we'll see are freight forwarders buying things that are, or ocean carriers buying things that are adjacent to what they do. Drayage makes a lot of sense, intermodal, warehouse-based ports, things like that.
You think freight brokerage, you think we will see a steamship line by a traditional freight brokerage, or you think that it's a different enough business model where they'll stay out of it?
I think in some cases, yes. I mean, so the obvious examples will be freight brokers that are strong in port-based markets. It'd be a little bit of a stretch for, an MSC to buy a Chicago-based broker, right? But someone that's got a strong presence in ports of LA, Long Beach, or Newark, or something like that, yeah, that makes sense. The other thing is, look, brokers are very attractive to people that are 1 degree removed. I mean, so freight forwarders buying brokers is something that I think we'll see more of.
Right.
And look, we saw this, I'm going to go back many years and it's in reverse order, but the C.H. Robinson acquisition of Phoenix was an example of a broker buying a forwarder. You certainly, I believe, will see more of the opposite.
Yeah, and UPS bought Fritz. There is conversation about FedEx spinning off its LTL business. Who is the most likely buyer of that?
Most likely buyer for the FedEx LTL business? Well, I mean, the big LTL consolidators, I mean, I think, look, an Estes would be a logical one, maybe an Old Dominion, and of course an XPO. XPO has the advantage of not just being an LTL, but also being part of the biggest acquisition machine we've ever seen.
Yeah, Brad Jacobs, I mean, someone once said that Brad Jacobs will never run out of money. Everyone's willing to invest in Brad Jacobs the way that, because of his proven track record of acquiring. Ben, you've also been involved in a lot of the earlier stage businesses, both as a founder as well as doing some early stage investment. You've got some businesses that are part of your portfolio, and you talk to a lot of early stage founders. The venture cycle, the venture market has changed so much over the last couple of years. What are you bullish on right now?
Well, a couple things. It has changed a lot. It's changed, first of all, in aggregate dollars. I mean, we saw, and you've published data that shows this, the aggregate run-up in freight tech investment from 2010 to 2022, I mean, it basically went up every year. Last 2 years, I guess let's not talk about, but are we back? Yes, but in a couple of targeted areas. Number one, AI-based funding, clearly. This is not just true for freight tech, it's true for the venture world as a whole. I mean, I was on Sunday night, or Monday night, I was with a large venture firm, Riverwood, and we were talking about some of the things that we're seeing, and they said, look, all we're seeing is AI, but the problem is the AI deals are also expensive that we're sitting out because we think it's a bubble. So AI, I think right now is maybe like internet was in 99, 2000. It's frothy. There's going to be some great stuff, and then there's going to be a lot that doesn't actually do what's advertised. But clearly that's one. And our industry is a very good one for AI because applied AI to situations where there's real transaction processing or an analytic problem, that's supply chain, right? So it makes a lot of sense. So I think that's one. Two, what we're seeing a lot less of, I mean, what we saw 4 or 5 years ago, and you talked about this yesterday with the digital broker phenomenon, there are no digital brokers being funded today, right? There were a lot of them that were funded, 4 or 5 years ago. But, to give credit where it's due, there was some great technology that came out of that. The Convoy technology in its next iteration with Flexport, going to be really successful, I think. But we're not seeing that, but we are seeing other things, maybe they're point solutions, right? I mean, like, green screens for pricing is an example. Other guys solving specific problems, Genlogs, the data set to be able to track fraud and, ultimately being able to cover 90% of the total U.S. market in terms of, where every truck is at any point in time. So I think these kinds of point solutions are more interesting than the guys trying to do everything. And then lastly, I would say, we're also seeing interest in, and I think funding activity and innovation in areas that are just better at solving workflow. I mean, so for instance, the idea of voice recognition to help truckers, whether it's Happy Robot or the business that David Bell is building. I mean, like these things fit workflow in ways that a freight guy can very clearly understand the value of. So I think those are 3 examples that we're seeing.
Yeah, we had David Bell just before lunch. He had the opportunity to talk about what he's building, taking what he learned from Lean and applying it through an AI widget. What do you tell the founders? So many of these businesses and venture raised all this capital, a lot of valuations got driven up during the sort of hype cycle of logistics. What do you tell those founders that are sort of have stranded businesses where they can't raise, they're not growing, they can't raise, but also they their investors are putting pressure on them to get out. What should they do? Should they sell their business at a lower valuation? Should they ride out the storm? Like, what is your guidance to those founders?
Well, it's a great question because a lot of people who raised a lot of money during peak COVID and peak freight tech are now facing that very dilemma. So it's an important question. Look, every founder, I mean, I've been a founder 5 times, you've been a founder several times. You would never found a company if you were not irrationally excited about your idea. So it's hard for a founder to say, you know what, let me objectively take a step back and say, does this still make sense or not? But the number one thing when founders ask me this question is, you've got to be able to ask yourself the question of, if you were somebody else looking at this, what would you do? The classic example of this, it's not quite a founder story, but it's the story of Andy Grove and Gordon Moore. So Andy Grove and Gordon Moore were building Intel. And there was a point in time when Intel was #1 in the world in memory chips, okay? Great, except for one problem. The Japanese started flooding the market for memory chips, and it went from a profitable business to a terrible business. So they were about to go into a board meeting, and one of them, I think Andy Grove, said to Gordon Moore, if you were on the board right now, what would you say to us? And Gordon Moore said, I would say, you're fired. And Andy said, exactly. So what if we do that job for them, and let's go in and say, hey, you should fire us because this business model doesn't work, but we're going to come to you with a different, better idea. And so they did that. They went into the board meeting and they said, imagine that you've just fired us because we're #1 in a terrible market, you know, this memory chip business, but we have a better idea. We're going to pivot to dominating this semiconductor market. And they did it, and obviously the rest is history. So to me, the lesson for a founder is do what Andy Grove and Gordon Moore did, which is, you know, envision that you've just fired yourself. What would you tell yourself about what you should do? And it might be sell the business and return proceeds. It might be make a radical change and pivot. You know, it might be something else. But I think for most people, if you feel like you're liberated from the prison, the shackles of having to keep doing what you're doing, even though you know it's not the right, you know, winning strategy, sometimes that liberation puts you in position as a founder to do something wildly different. So my advice is follow the Andy Grove advice.
No, I think it's an interesting thing. It is interesting how many of the businesses that we thought were going to be winners. So I take visibility as an example. Visibility was arguably the hottest concept business 5 years ago. It has, in many ways, not achieved the goals of 100% visibility. Those businesses got marked up substantially. They've failed to achieve the growth trajectory that was sort of expected of them. Where's your view on visibility and some of these other business concepts?
Visibility. So a couple things. One, there's a real problem that sits underneath it, okay? And the real problem is everybody wants to know where's my stuff, whether that's on the maritime side, whether that's on the e-commerce side, or, you know, or otherwise. Two, yes, I think it was overhyped, but there's a real problem and there is real value to be created. I mean, P44 has had more success, for example, focused on maritime visibility. And I think that problem only increases when you look at a world where maritime disruptions are increasing. So maybe focus on that and be great at that. On the other hand, there's the visibility associated with e-commerce shipments. I mean, one of our companies, Parcel Perform, specializes in that. The question of post-purchase, tracking, visibility, where's my stuff? And that's a big need because, look, if you buy something on Amazon, you're going to know probably where it is, but if you buy it anywhere else, it's not going to be as good, and so there's a real pain point there. And so I guess my takeaway is it's more about zoning in on the specific pain point that somebody has, for which I do think there are going to be multiple billion-dollar businesses. Maybe it won't be as big as people thought it was 2 years ago, and maybe it's not going to sustain as many companies as are there, and maybe there will need to be some consolidation. I mean, you know, one day FourKites and P44 will come together, even though...
I don't know. I've had this conversation both on Twitter, X, whatever we want to call it these days, as well as both with Matt and Jet. I don't know. There's a lot of personality. There's a lot of history between those companies, even litigation. So it will be interesting to watch. Is there any business that's out there that you are like, that is maybe off the radar, that you think is a business model that you're incredibly enamored by right now?
Well, there are a few things in the pipeline that we're looking at, but I'd probably get killed by my partners if I leaked it at Future of Freight. But let me say this: I think to me the rule that I've tried to follow is look for the customer pain, and if you solve that, then everything else falls into place. So I think there was a period in time where a lot of people were chasing what was getting venture attention, what was getting funded. And oftentimes that's the worst thing that you want to do because you're chasing the thing that everybody else is chasing. It's sort of like the analogy is it's like watching 6-year-olds playing soccer and they all chase the ball at the same time.
Herd ball is what we used to call it.
Yeah. So you don't want to play herd ball. So the question is, where do you go? Somewhere that's counterintuitive. I think there are a few things that to me are interesting. One is you've got to ask yourself, okay, how are people going to do business differently? For instance, using AI. Can you use AI to automate, everything in a broker, ranging from, the outbound emails to the phone calls to the tracking to the pricing to the analytics, you name it. Could there be a virtual broker that simply uses best of breed technology in all those places? It would have seemed like an insane idea, 20 years ago or maybe 5 years ago. Might not be insane now. It's counterintuitive because all the venture guys still think that eventually the brokers are going to go away.
The world suggests the opposite, right?
Exactly.
In fact, Bill Dreigart was up here a few minutes ago and talked about the fact that, his view was it would be massive consolidation early on in 2015, and it's gone the opposite direction. We've seen actually fragmentation as the small brokers have been able to use technology that's arguably better than what these companies were building in-house.
That's right. I think that's right. I also think other interesting, creative areas. In many cases, what happens in the U.S. market, I mean, the idea of being a fast follower for Europe or Latin America or somewhere else, that's been a winning strategy in other technologies. And so, by the way, that's something that we've looked to do. So, like for example, seeing the growth in tech-enabled logistics companies in the U.S., we invested in Lifted, which is tech-enabled logistics in Latin America. We didn't see anybody else that was doing that, nor doing it particularly well. And guess what? That business has scaled up, and it's now just about profitable. And
one of the most remarkable technology businesses is a company that takes American business models, successful tech businesses, rips off the business model, almost copies it, incubates a team, and takes it to Europe. And they just do this over and over. And they've done it in the mobility space. They've done it in the e-commerce space. There's an enormous opportunity internationally to do exactly what you described, is take these logistics models that are successful in the US, where it's really sort of market tested and battle tested, and take it to a market that is perhaps more frontier.
Absolutely. I mean, this is what Rocket Ventures did. They're a venture firm formed for the express purpose of doing what you've just described.
Right.
Exactly. We did that with a company in Europe called Bird. It was an e-commerce fulfillment company, like a Shipmonk or a ShipBob or a Flex, Deliver Stored, but in Europe and scaling up. So yes, I think being a fast follower of winning U.S. models in Europe or Latin America or elsewhere is definitely an opportunity.
So Ben, I've asked everybody this view on the freight market, and I'd like you to answer it from two perspectives. One is the current, what you're hearing from participants in the market about the current market, and then I'm going to ask you a little bit about the sort of prognosis about the funding environment, both at the top end of the market and the bottom end over the next 5 years.
Okay, so to be a little bit of a contrarian, every time I've talked with someone about where are we in the freight cycle in the last 2 years, the answer was always, we're 6 months away, which is a great answer because nobody remembers 6 months.
Yeah, it's safe, right?
Exactly. It's like an inverse Kramer kind of strategy. But I do think that we're seeing a number of signs of improvement. I do think that, I mean, you've called it and said that we've hit bottom and things are coming up. I agree with that. My sources for that, beyond the, the great research and articles and data that you publish, I would also say, look, we see freight rates going up in green screens. We also see in freight brokerage, like our portfolio company Everest, starting to see signs of that market growth as well. Whether that's in terms of demand increase or pricing increase or capacity tightening, in all those areas, that's true. Now it's more true in certain pockets. You made a point in a recent article about how there may be some pre-buying in ports in advance of tariffs, and so is that an artificial acceleration of growth, or is that something that's recurring? But nevertheless, yeah, we see data that supports all of that. So, yeah, I'll be more aggressive. We don't have to wait 6 months. It's happening now.
Yeah. And then on the funding environment, your sort of view of the next 5 years.
So number one, like I think there will be increased capital being deployed in freight tech in the supply chain arena for the simple reason that there's lots of opportunity and lots of value creation. And I think that fits into a number of buckets. There are the classic traditional buckets, like TMS and WMS. Then there are the areas that are more niche-y, point solutions like pricing or analytics, et cetera. And then, of course, there's AI and its ability to transform everything. And then I think fourth, there are consolidators. It's interesting. We talked about Brad Jacobs earlier. I mean, I had a front row seat to that because we were an original investor with Brad in XPO. Brad, of course, probably the best consolidator that we've ever seen. It's interesting that nobody has done an XPO strategy for freight tech. There have been acquisitive companies, right? WiseTech's been acquisitive, Descartes' been acquisitive, so have several others, but none quite at the scale of what XPO did. I think there's an opportunity for that, and I think somebody's going to be a big consolidator in supply chain tech as well.
Well, it seems like a challenge for someone in the room. So hopefully we'll see that happen and can report on it. Ben, really appreciate your time. Thank you.
Greg, thank you.
Ben Gordon, everybody.